Hi, this is Randy Finney with Right Side of the Chart, and this is a weekly closing market wrap for the week ending Friday, February 5th, 2021. I'll do a very quick overview on the equity markets, quick update there, and then I want to take a look briefly at the VIX as well as the VXN. The VXN is the NASDAQ's version of the VIX. It's the volatility, yeah, it's exactly what it is, the volatility index for the NASDAQ. So we'll look at those two volatility indexes and then quick look at the semiconductor sector. There's some things that stand out there. All right, just starting out with a recap for what's happened over the last couple weeks. SPY broke down back here, gave us a sell signal Wednesday, January 27th, breakdown, and you can see this is my primary trend line, the yellow trend line off the March lows, and we're back testing. We continue to back test that. Divergence is still in place, but again, divergences can take quite a while to play out, and then once in a while they don't play out. More often than not, they do. QQQ, I was waiting for the Qs to break down to confirm any breakdown on the S&P 500. We did get that, as I mentioned last Friday, a week ago today, but I put a big asterisk by it because the fact that we had two of the market-leading FANG stocks still to report, Amazon and Alphabet, and therefore I said you'd have to take it with a grain of salt until we got earnings out of the way. So what happened, it did prove to be a whipsaw. We came back up, closed about on a hair above the trend line, again, depending how I zoom in or where these lines get moved around sometimes when you scroll. But we regained it, and now we're going to close the week solidly back above there. So that was a whipsaw signal, but again, one to be taken with a grain of salt because we didn't have the big earnings from Amazon and Alphabet out of the way yet. And so what that happened is Amazon, like most of the other FANGs, has sold off since earnings. Not by a whole lot, but it's down below where they were before they reported. Whereas Alphabet had a pretty big gain, and it's held those gains. And so really Alphabet almost single-handedly put the NASDAQ back up in here inside the wedge. So that's it. We're above trend, zero sell signals. We had one, but it was a whipsaw, and again, we were waiting for confirmation. Let's look at one more thing. We'll look at the futures, and I'll move on to the VIX and the semis. This is the NASDAQ 100 futures NQ 60-minute chart. Again, it's been a series of these little divergent lows during the uptrend that are the catalysts for the next leg up to new highs, and then these divergent highs that send you back down for the corrections. And so that's what we'll wait patiently. There was a little divergent high there as well. It's not listed, but it's drawn with the lines you can see down below. Divergent high, divergent high. The last divergent high was right here. So that's how this market is stair-stepping higher. Look for the divergences, and we do have one now. In fact, the divergence we had in place back here has only extended. Same divergences are now larger as the indicators go on to make equal or lower highs, with prices making a marginal new high, meaning a slightly higher high. So that's what we're looking at next week, and here's a minor uptrend to watch, and that is NQ, the NASDAQ 100 futures. Here, I'll extend those divergences like this, take that line there, and that's where we're at right now. So we will be heading into next week with the latest divergent high, and again, that's been the MO recently. When you get the divergent highs, you get the pullbacks, you get the divergent lows, you get the rallies. Okay, and on to the volatility indexes. This is the VIX CBOE market volatility index, and the key things, we had a nice rally. In fact, this was the biggest one-day gain in quite a while, especially since the market wasn't in a big correction mode. So we had a big spike, and again, it was telegraphed in advance with divergences. What we're looking at here, you had a divergent low at this point. Then you had a trend line breakout and a big spike up in the VIX, a big tradable spike. And these are all well into the double digits. I mean, that alone was 50-something% in a single day, that one candle. Followed by a pullback and then another thrust up. And we came back down, extended the positive divergence. It started moving higher, and then boom, we had this spike up. So let's just take a look at this and compare it to previous what happened after previous divergent lows. And remember, each spike, although there wasn't a big drop in the market, there was a drop that day. So you're almost always, rarely without fail, when you see the big spikes in the VIX, that's coinciding with a pretty sharp drop in the stock market. Just to wind it back here, let's not go back too far. You probably can't make the chart out if I zoom in, go back too far in time. All right, so we had a divergent low here. and then you start to move higher, and then boom, you get a big spike that coincides or coincided with a drop in the stock market, a lot like this one. And then you pull back, and it's not unusual to get a second higher spike with another drop in the market, and that was the end of the run for that divergent low. We went on to put in another divergent low right here, broke trend, had a spike as soon as we broke the trend line, broke out. But what happened? The VIX pulled back again, and then another spike, just like this previous one. The second spike right here was higher than the previous spike, just like it was right here. And so everything kind of abated until we broke out right here. Next divergent low was right there. There was your breakout and back test, and the VIX never looked back. Biggest gain in many years, if not ever. I can't remember. I think we came close to what happened back in 2007, or maybe it was even the dot-com bubble. And that was the COVID lows, the big drop into the March lows. But again, it was telegraphed, making no mistake about it, very clearly in advance, with divergence, or positive divergence on the VIX, along with negative divergence on the index. So we came full circle. After that big rally we've had, we put in our first divergent low there, back in. You can see the scaling down here. I think you can make it out in the video. This is late August, early September. Boom, pop in the VIX, and after the break of the trend line, the bullish falling wedge. Then we had a secondary, which is again the common theme, a follow-up jump, which was even larger. Okay, so that was again, I'm correlating to this time period right here. Then you came back in, retested the previous lows. I'm now making a mess of this, but I think you can see where my cursor is going. We retested the previous low, just like we did here. So you had the breakout right here, first breakout in a while, pop one, secondary spike, even larger, came back in like we just did, tested the previous lows, and also extended the positive divergence. And now you had this initial pop, which we just had. So, you know, if the pattern repeats, and it could take a while, both of these were spaced out at least a month apart. But that's what would keep that pattern going, would be another spike in the VIX coming in the next. Hard to say, you know, I wouldn't try to count these days and then pin it down, but wait for a breakdown in the stock market, whether it comes next week or 2 months from now, and you'll probably get the next spike up in the VIX. Again, that's been a pretty consistent pattern so far. So I just want to point out, and the VIX is still elevated. You turn off all the lines that I have there, and you can see the VIX is at support. This is support. That's where the VIX is pulled back to. It's been resistance for a while. So this is a pretty key level. When there's periods of volatility, once the market cracks, like here, here, and here, the VIX gets above that line. Here it's remained above it for quite a while. So the bottom line is, other than everything else I just said, we've pulled back to a very key support level in the VIX right now. So that's something worth noting. And we'll see what happens next week, whether that support holds, whether the VIX trades on it, or we break down. If the market were to have a blow off top in the next couple months here, we would probably break that support level and come down to the bottom of the old range. This is the bottom of the old range here, where we had an unprecedented period of low volatility in the market, or relatively low for a while there. And again, the VIX has been elevated. So that's it. VIX at support, as is the VXN. The VXN is the NASDAQ 100, NASDAQ Volatility Index, not just the NASDAQ 100, NASDAQ Composite. And you can see very, very good support, just like the VIX. You know, it's not by mere coincidence, but they're different levels. So there it is, about 25.55 has capped all pullbacks since we've entered this period of an elevated VIX. It's odd because we're not in a period of elevated volatility. Volatility's been relatively small or low in recent months. We've had two mediocre corrections since the market bottom back in March of 2020, and those are, you know, reflected by these spikes. But again, that keeps us at support. And you know, TA 101 says when a security hits support, it's either going to bounce. I mean, it could trade around for a while, consolidate on that level, but ultimately it'll bounce off that support, or the support breaks. And if the support breaks, it brings us back down to the bottom, most likely, of that prior trading range where I just put that line here. Let me put it on so you can see the number. Okay, so what does that mean? It's something to watch. The VIX at support means it could bounce anytime, or at least hold up here. And again, always align my analysis of the VIX with the stock market. You want to see those same trend lines I covered before in QQQ. SPY is back testing, as I just showed you. It will close the week back testing the trend line it broke down. QQQ had that whipsaw. It snapped back above. Respect it as long as it is above that trend line, but if it breaks back down below, I still think the trend line is very valid, even though it's been penetrated with that little whipsaw. Again, all you have to do, every now and then you will get a whipsaw. So if you just erase that little red candle there, this trend line still has a lot of reactions and we're still just barely above it. So just want to point that out. We could get a sell signal on a solid break and close. And then finally, the NASDAQ 100, is to me the big index because it has the market leading the high growth companies in this world, not just technology, but Amazon and and Apple and Facebook and Tesla. Those are your high growth companies, mega market cap, largest companies by market cap, and the top components of not just the NASDAQ 100, but of the S&P 500. So when they break, this index will break. And that's what we want to watch. Other than that, we're in an uptrend now, but let me show you something to watch for next week. I mentioned recently the semis looking a little bit precarious, and the semis are sort of, I like to always say, the canary in the coal mine for the tech sector. And the semis are doing good, or let's say tech is in a downtrend, but the semis start to bottom and rally. That usually bodes well for the tech sector. And when the semis top, sometimes they will turn before the tech sector. It tells you there's trouble in tech land if the semiconductor stocks are starting to sell down. Now, we are above trend. I don't have a perfect trend line because like the NASDAQ 100, there was a little whipsaw there, but it's a pretty decent trend line. This is SOXX. It's one of several semiconductor ETFs that I'll use to track the sector. And it's, pretty decent trend line, enough reactions. That key March low right there, September reaction low, that October slightly whipped through, and we've been dancing on it quite a bit. So it is a pretty darn valid trend line in my opinion. Now let's look under the hood real quick. And there's divergence there on the PPO. No divergence on the RSI, but we do have an extreme overbought reading. We have not been this overbought on the semis. I'd have to go back all the way for, back into 2017. And that's where we're at now. We're coming off that overbought reading. I'm not going to go through each and every component of SOXX, but I'm going to go through most of them. I flagged the ones that stand out. And the ones that I didn't flag, I will say some of those you have either more constructive charts than the charts I'm about to show you, or I just don't have that good a read on it. But here's the ones to watch, I think. NVIDIA. NVIDIA is one of the largest ones, if not the largest by market cap now. I think it overtook Intel. Yeah, they're very close, but it's slightly larger. There's a trend line to watch, and I've highlighted this one before. Put in a divergent high back here. And like a lot of the market-leading FANG stocks, it's just been going sideways now for months, and it hasn't broken out yet. So that's one to watch, break of that trend line. Intel, I've covered Intel quite a bit recently. Here's a trend line I just added there. Last time Intel, had a nice bullish setup was back here. I pointed that out on the drop. The pullback to 43, it's been very good resistance for quite a while. This line right here, you can color that up any color you want just to kind of know that that's a big level in the future. Whether you get there again and the charts are constructive, why constructive? I mean, bullish divergence, overbought conditions. That was the first divergent low we had it in a while. And the stock rallied from there. But here's what to watch now. It already rallied up to the top of the the trading range. It's been in a multi-year trading range right there by the blue box. Already hit the top of that range. So I think it's safe to say, at least for the time being, the end of the run is over. Ultimately, if it breaks out, solid and sustained breakout above there, not a little whipsaw like that. That's what happens when you get a whipsaw. Whipsaws or false breakouts are pretty bearish if they're to the upside, and they're pretty bullish if they're to the downside. So these are things to watch for. But a solid and sustained breakout, bullish. Otherwise, you'd expect, just like happened here and here And if I go back to the left, no, that's it. You get to the top of the range or close to back here. The top of the range was that yellow line. You come back down to the bottom of the range. And what would cause that? Well, catalyst at this point, well, we've already been rejected off the top of the range, but a break of this trend line might do the trick to get us down there. So again, these are setups, something to watch. And if you start to see the semis come under pressure, that will probably then spill over into tech as a whole, the larger tech sector, semis being a subsector of tech. So again, just levels to watch. Now, a couple of these stocks have started to crack. ASML, you can see an uptrend line. We broke it, but you can see we're not moving down impulsively. In fact, we've been moving up since we broke that trend line right there. We're back testing from below. And I think that's largely a function of the fact the market still has a strong bid. There's still inflows. Most stocks are going up, and most semis have yet to break down. So I'm doing this as a setup for individual trade ideas, whether it's a semiconductor ETF or any of these individual semis, but also to watch what to watch for, what might finally put the brakes on the rally in the market if we get a lot of sell signals here. Again, a few of these are broken down, but not enough. AVGO is Broadcom, nice clean up trend line. So that's why I'm highlighted the ones that I'm going over. I flagged these just to show you there's some nice uptrend lines. Now, here was a nice uptrend line as well. And it did have a correction, and that was double digits. It doesn't look like much on these semis. They move so much from high to low. I use log scaling, so it may not, these corrections here, I'll tell you what that was, just kind of put in perspective. From high to low there, that stock dropped about 12%. So it looks like a little blip. But again, log scaling is going to put everything in a little bit different perspective. If I turn off the log scaling, that's what it looks like, and the drop now looks a little bit bigger there. But I much prefer log scaling on a chart like this. So either way, just because that wasn't a huge drop after that trend line break doesn't mean technical analysis has stopped working. There was a correction. It just wasn't very big. But now we're even, the divergences are much, much larger. Oh, fact, let me take that back. We didn't even have divergence on this breakdown. We had a little bit here. Actually, a small divergent high. I should mark it for you. I'm probably getting off task here. There was a small divergent high there, and with a small divergent high comes usually a small correction. And now we have a much larger divergent high, and you can see two potential targets for that one. QCOM is Qualcomm. Now this one already broke down. Forgive all the lines on the charts, a little busy, but focus on this one right here. A lot of clean reactions on this. This is a nice clean up trend line off the March lows. 1, 2, 3, 4. That's a whole cluster, and then multiple reactions there. Zoom in. We broke down, back tested. This is what I like to see on a breakdown. I like to see, number one, an impulsive candle, solid close below the trend line, which we got. Sometimes that's it, you never look back, and then sometimes you back test. And when you back tested, the first day nothing happened. The second day you back tested, you were rejected impulsively, a big red candle, and then look what happened from there. So I imagine earnings was probably earnings induced, but again, the technicals and the fundamentals almost always align. It's not mere coincidence you get this stuff. So there's one that's broken down. That is a sell signal. It came after a divergent high, and by all accounts, this one looks like it has more downside with the first stop there around 140.73. Second stop would be the bottom of that gap right there, and potentially down here. Now, whether or not we go much beyond that 140.73, that would be my minimum target, will most likely depend on the sector. Because if the semis as a whole continue to rally, the buyers will probably come in, step in. No guarantees, but most likely step in and buy Qualcomm. Okay, we've got about maybe 8 or 10 more. Texas Instruments, close but not there. So here's a common theme. A lot of these guys are right on support. Some have broken down. Big divergence has been building for quite a while. Would indicate a pretty big drop when we get the sell signals, and the sell signals will come on a solid break. There was a little whipsaw there as well. That might have been earnings induced. You can see a gap right there. I can't recall when TXN reported, and then 160.16ish, that'd be your first target. So this one could play out something like this: head there, hit it, bounce, and then go on down. But again, the point is, the more of these that break down, if you were to replicate these charts at price alerts, and then all of a sudden one day you get 2 or 3 or 4, or maybe 1 or 2, the next day you get a few more and more of these semis break trend, that's more likely they're going to drag the rest of the sector down with it. So again, just levels to watch, trade setups, even though a lot of these have triggered and you could take a short, but the trend in the market's very strong right now, the broad market, even the tech sector. So you're swimming against the tide, even though some of these have broken down and are offering objective shorts like AMAT right here, Applied Materials, breakdown, back test. But you want to see, again, some more of these break down, I think, before you take a short on the semis. And that could come next week, or it could come in 3 months from now. Who knows? MU, Micron, uptrend line, bearish rising wedge pattern, breakdown pretty impulsive, follow through the next day with a red candle, hit the first support right here, 74.10, bounced. So, if back out everything every other semiconductor is doing right now, everything I just talked about, this chart alone in a vacuum, I'd say, oh, it's a beautiful short. Even right now, if you miss that initial leg down, it hit support, it bounced, counter trend bounce, and it'll probably take the next, and I think it will. That's where it's probably going. Just can't say it with the highest degree of confidence until we see the tide change and shift. Right now it's a incoming or rising tide in the market and the tech sector, and even the semis. We've had a couple start to correct, but we need a little bit more evidence, and then that will increase the odds sharply that we come down here to these next targets on these stocks. Trades, I'm giving you trade ideas. LRCX, divergent high, common theme. Most, but not all of these, just about all the semis have at least divergence on one indicator, if not both. Negative divergence there, and there's a trend line, so we're above trend. Maybe a bear flag going on right here. This is a flagpole, an impulsive leg down followed by a level of consolidation. So next week this would have to break down soon. That's why I'm saying next week, to keep the symmetry on the bear flag. So if you saw a break of the bear flag, if you see an impulsive drop next week on LRCX, and it takes out this trend line, then that is an objective short entry, even though, again, it's a little bit aggressive counter trend trade. And the flagpole is the measured target. It's the distance to the flagpole added to the top of the flag. That would take us down somewhere around there. That's LRCX. But right now you're above this trend line, and you also have these previous reaction lows right here. So you want to see a little more, you want to see a next sell signal, like I said, a break of both the trend line and below that potential bear flag. ADI, analog devices, another one that's already broken. Minor trend line, not as big as some of the other trend lines, but a breakdown nonetheless. Nice support there, about 146.74. All these reaction highs has been bouncing between there. So your next sell signal would come on a break below 146.74. KLAC, maybe I just wanted to point out the divergence. I don't have a lot on this chart, a big opinion on that. MCHP, this is called a megaphone pattern, aka broadening wedge pattern. And there's one trading strategy when you recognize these patterns is to short anywhere from a 50 to 61.8% fib retracement of that move off that third tag at the bottom there, and with a stop somewhat above, and then you hold and wait for a breakdown below the pattern. And if so, this would be your minimum target right there, 112.22. But again, if you take all the lines away, the stock's in an uptrend, so it's aggressive counter trend trade. Giving you these ideas if you want to take them, or if nothing else, just watch. And I wanted to put a line right here. There's some resistance right around there as well. MRVL, Marvel Technology, nice rising wedge right there. Trend line break, 3 red candles so far. Nothing big, not very impulsive selling, but it is a breakdown, and it's been confirmed with additional red candles since the breakdown on we can slightly on Wednesday. Let's say that's yesterday. Thursday was the first day that breakdown was confirmed with a solid red close below and follow through to the downside today. And like a lot of these, big divergence there, negative divergence. Okay, I had to pause the video for an interruption there, but we're going to wrap up here. We're almost done. There it is. Big, nice, clean, rising wedge pattern. Lots of reactions on the lower trend line, which is the most important line. Remember, the top line is just a divergence line. You only need 2 points there, but on a trend line, I like at least 3 points, 3 distinct reactions. The more, the better. So you have about 4 there, and again, another one that has broken down, and it's not falling hard, and I attribute that to the fact both the stock market and the sector are holding up at this point in time. But something to watch. The more red candles you get here, the more downside on these that have broken down, and the more that haven't yet broken down but do break down soon, the greater the chance. And I continue to maintain this market, I think, is a powder keg. Just needs that catalyst. Indexes breaking down, some key stocks and sectors breaking down. I think there'll be a very quick rush for the exits when that finally comes. All right, next up, SLNX, Xilinx. That one put in a divergent high back here. So again, there's and again, I said this. I'm picking the components of the SOXX. It's one of several ETFs that track semis. There are other semiconductor stocks out here, and I am showing you those that are the most bearish-looking charts, either broken down or in clearly bearish patterns. So there it is. This one broke down here. Clean, very clean uptrend line, rising wedge like everything else. And then when it did it, we only had divergence here on the RSI. We did not have PPO divergence because the PPO was making a higher high. And so that, in large part was probably the catalyst for another high. At that point, we put in on that marginal new high, we did have negative divergence across the board on both indicators. And since then, this stock has clearly been moving lower. And, this is a downtrend right now. And that, to measure it out, again, it might not look like much, but that's a 16% drop so far. And there's no support here. It doesn't mean the stock can't continue to fall, can't bounce is what I'm trying to say. It doesn't mean that it can't bounce, but more than likely you're going to come down here, ultimately work your way down to at least that support level down there, about 116 almost. QRVO, again, clean, simple stuff, very well-defined trend line, negative divergence. Breakdown, back test, 1, 2, 3 days. After the third day, impulsive rejection, followed by another red candle, followed by a gap down, and another red candle today. So nothing but red sticks since that last back test right there. You can sharpen up that trend line. It comes in perfectly. A negative divergence, and everything you want to see, that we had a divergent high there. And, just to get an idea, even if we're just looking at a correction in an ongoing bull market, which is all you can really do right now, assume that, then that's still about a 17.5% drop. That's just how these semis roll. This time around we had a divergent high and it was good for a 45% drop. So, the semis tend to move. They go up a lot when they're in a bull trend, and they tend to fall very hard and fast when they're in a bear trend. So right now, this one really, I can see here some support. Next sell signal will come on a break above 163.14. You can see my additional targets down below. TER, Teradyne, breakdown, trendline break after the divergent high, only on the PPO right there. Very overbought on the RSI. Sharp move down, potential flagpole with a potential bear flag. So it's all going to, what I'm seeing, since we've already looked at least 2 different bear flags on a couple of these leading semis, it's going to happen. It'll probably happen next week, early next week, for these guys to break down and, break out of those bear flags. If this one stretches on much more, doesn't mean the stock can't drop. It may go up here to go back test, but it really would take out the asymmetry. That bear flag would be too large in proportion to the flagpole. So something to watch for next week, and what you want to do there, if you're going to trade it, if you want to get a jump, maybe take a starter position on some of these more bearish semis like this one. You draw a trend line there, and that's what you want to see, is a impulsive break down below the lower trend line, which is the bottom of the bear flag. That would be your sell signal. Keep in mind, a lot of these are above trend. These trend indicators, like the PPO, it's curling up here right at the 0 line, which often acts as support when you're in a bullish trend. So a case can be made that this is just a correction in an ongoing bull market. But we can also make a case, and especially if I go out to the weekly charts, which I'm not doing right now, that maybe the start of something much more. MPWR, monolithic power systems. Here's your trend line off the lows, nice and clean. That comes off the March lows. Another reaction there. And lately we've been dancing on it. And this one, like quite a few, I didn't mention, also put in, I have several that I've noticed that have recently put in bearish engulfing candlesticks. That's a candlestick, a big red candle that will engulf the previous candles. In this case, it engulfs the 3 previous candles. And what I always say you want to see, or I like to see, the textbooks might not say it, but I always want to see confirmation with additional red candles. And as I like to say, the redder the better. So we had a red candle the next day followed by a big gap. That is confirmation. We're moved up a little since then, not a lot. Basically today we just backfilled that gap at the high, and then they rejected it after the gap backfill, and this one went down. So bottom line is that is a sell signal, a bearish engulfing candle, but you're right on support now. So the objective thing to do at this point is wait for a break of the trend line. I don't short at support. I either go long on support, cover my shorts on support, or wait for a break of support to short a stock or add to a short position. And on this one, I'll give you one additional target, a little support there. Targets are 324, 302 and a quarter, and then maybe 282, depending on if and when we get that breakdown, the sell signal, and what the rest of the sector is doing at the time. ENTG, another one starting to crack. It broke trend today. Yeah, slightly below trend, not by a very large margin, but coming off a negative, coming off a divergent high, that is a breakdown. So we'll see. And again, common theme here is next week should be telling. If we see some downside in the semis early on next week, you're going to get some of these recent breakdowns confirmed. You'll have some of the other semis that are right on support right now, sitting right on trend lines or horizontal price support. They will break down, and that will help increase the odds you're going to get a correction here in semis. And it's hard to imagine the semis falling hard and tech continuing to rise. At least, semis can sometimes do their own thing for a little while, but ultimately the rest of the market's going to take note there. CREE, this one already broke down. Initial leg down, it was pretty impulsive, off the recent highs there. This stock has dropped about 20+%. Little kickback rally, and that's it. We'll see where this one goes. Is this just is that it? Is it a one and done correction? We're going to new highs, or is this just a snapback rally with the next leg down to come? MKSI, divergent high. I don't know why I covered this one. It doesn't stand out to me. I shouldn't have flagged this one. Possible breakdown there, but I'm not crazy about the trend line. But it's at support, or just hit support, 156.75. IPHI, another one, negative divergence. Trend line, nice trend line, long trend line. Here was a little minor trend line. Here was our last divergent high in this stock. That was back in July. And from there, even though this stock was still in a larger uptrend, was good for a drop of about 33%. So this time around, if and when that this trend line goes, my expectation would be for a drop larger than the previous one. Probably bring us all the way back down to that 102 level, and from where we're at today, or close today, that'd be a drop of about 37%. It wouldn't get there right away. There'd be a reaction somewhere in here. There's a big old gap. The buyers will step in. There's some reactions. In fact, I'll give you that right now as my first target, 140.40 right there. BRKS, bearish rising wedge, negative divergence. Okay, so you guys get the theme. Last one I had flagged was LSCC. Again, there's another bearish engulfing candle right here, marking the top. Everything you want to see, follow-up red candle, and then even a big, larger red candle. Went sideways for a while, and it's just been under some selling pressure since then. Like everything else, nothing goes straight down forever, especially when the sector that it belongs to is still in an uptrend. So this one dropped 20% so far. just one day, little brief undercut of that trend line right there, back above it right now. The last time we put in a divergent high here, it dropped 18%. So, it is possible that's it for the correction, and we're going to, make a new high. And you can see down here, I have drawn out, this divergence that we had last time right here, almost perfectly mirrored, in scope and the slope of the line as well. The scope is, how long it is, how long the lines, and then the slope of the line is the angle. They were almost identical divergences and almost identical corrections so far. So I could see this one pushing up, and if it does, all that's going to do is extend the divergence if we get another move to a new high anytime soon. So again, it's a sector that is on watch, like everything else, for the next sell signal or breakdown, and that could come any day now, or it could come any month now, and anywhere in between. So in summary, the VIX is at support. S&P 500 was back testing the primary trend line, or closed the week on a back test. QQQ is back above, but slightly, just barely above the uptrend line. And the other sell signals besides QQQ breaking down and more of the semis I want to see, still maintain that Apple needs to break this uptrend line right there, and it's kind of sandwiched between there. Like most FANGs, it is down since they reported earnings, below where they before their earnings date. But also near the top of a multi-month trading range. Apple is either going to break out soon and run to new highs like Microsoft and some others, or it's going to break that trend line, give us a sell signal, as well as Tesla. So those are the two, probably the things I'm focused on the most right now, Apple and Tesla. Tesla needing to break the 800-ish level to give us a sell signal. Otherwise, the trend remains intact. And then, of course, there's that breakout of Microsoft that's still good for now. But if that were to fail, then you would add that to the bearish checkmark pile. In other words, a move back down into the trading range, and then ultimately down below that trend line there. So right now, bulls get a check mark there. I mean, they get a check mark for everything. Apple's still above trend. It hasn't broken down. But again, just levels to watch. All right, guys, wrap it up here, and we'll pick this up next week. This has been Randy Finney with Right Side of the Chart. Have a great weekend.